So good afternoon, everybody. Asante sana, sambuona. We have representatives from those two language groups here, and we may have others in the audience I can't really see. You know, I'm clearly a non-African representative on this panel, but I first came to Africa in 1982, so I think I'm almost an honorary African at this point, and I can tell you as an honorary African that in this region of the world where I've also had the good pleasure to live and work, for a long time people have said, well, you know, Africa, it's behind. There's nothing to learn, nothing going that has any relevance to us in ASEAN. But I hope at the end of this panel we'll show you why that's not the right attitude to have and why Africa is actually, in many respects, in FinTech, going from last to first. And it's doing it in key areas like mobile phone-based financial services, where Africa now, as a continent, has the highest per capita use of mobile phone-based financial products of any region in the world, not just more than ASEAN or Asia, but more than North America or Western Europe, but per capita. So, and we're going to talk about that and why in this panel. And I'm going to start going down to my far left, your far right, to Buhle, to explain from the standpoint of JUMO, why has this happened and how has the cell phone made a critical difference in what you're able to do?
Thanks, Matt. I think, you know, the first thing is a company like JUMO would not exist without the cell phone, right? We're a company that started in November 2014. And we've already reached 10 million customers. That would not be possible without cell phone technology. I think what's happening in Africa is you're seeing a new type of distribution mechanism in the form of the cell phone. You have millions of people coming online, many of them for the first time. And what that coming online means is that people that have previously been invisible and not accessible as a market are suddenly visible. And because they're visible, they can start to access all kinds of services. They can start to move money, they can start to borrow, they can start to save. And that is really the difference that cell phone technology is making for the consumer. But at the same time, it's also transforming who gets to participate in serving these customers. So a small company like JUMO can actually participate in financial services, can use really cost-efficient infrastructure like cloud computation to lower the unit economics of reaching these previously invisible people. And I think together those two things, the changing in who's visible and then the changing in who's able to participate, has really created kind of a hotbed for innovation. And in that innovation, we're seeing increased access and increased financial inclusion.
So it's opening doors on both the demand and the supply side. It's letting both the customers take part in a new way, but it's also letting new entrants come in. Now, Issac, you represent a commercial bank, and that commercial bank has existed since before there were cell phones. But you're a very different commercial bank today than you were back then. And tell us more about what the cell phones meant to the Commercial Bank of Africa's business.
Thank you, Matt. Commercial Bank of Africa has been in existence for just under 60 years as a conventional full-service bank. But I think the big change in our business came in close to about 15 years ago when we began playing around with the use of the mobile phone to basically enable our customers complete basic funds transfer transactions and also basic inquiry. But the big jump came in with the partnership we had with both Vodafone and Safaricom, which brought M-Pesa into the market just about 12 years ago. At the time, the intention was to solve a real problem around collection services for microloans. The reality is that that part of the experiment didn't go as well as we expected, but it morphed a new thing, which was essentially the ability of people to transfer money person to person at speed and in a secure manner. And what we've done as a bank over the last 12 years is really to take advantage of this in terms of how to ensure we can identify more use cases which allows our customers to be able to be part of the financial sector and economic activity in our countries. And 6 years ago, we recognized that the way we were delivering banking services was not going to drive a lot more people into the financial services market. M-Pesa was becoming very successful, but the full use of this service for banking activities was not picking up as fast as we had wanted. And so we partnered again with Safaricom to then build the banking side, which is essentially savings, deposit taking, and then lending within that particular ecosystem. And essentially what we've done in that period, over a 6-year period, we've been able to convert in Kenya more than 3/4 of the M-Pesa customers into proper banking customers. And so in Kenya, we serve close to 24 million customers who basically have savings accounts, are able to borrow, and are able to move money around in a banking ecosystem and also on a money transfer side. And so for us as an institution, we see the mobile phone really as a tool which allows people to access services which were previously unavailable to them, because the brick and mortars model worked for a while. But the reality is that today, not many people want to take that trip to the bank. And the cost of doing so, at least from an African perspective, is extremely high. And we've now replicated that trend in Tanzania, in Uganda, in Rwanda, and more recently in Ivory Coast, where we serve a total of 36 million customers.
Wow, so lots of interesting stories there, and I hope that the questions will dive in. But just to put it in context, you say you have 24 million customers in Kenya today. I remember that for many years, that's just Commercial Bank of Africa customers. There were fewer than 5 million customers in the whole banking system of Kenya for most of my lifetime of working until these last few years. So the magnitude of the entry. But at the same time, it was also a learning experience, because when you were trying to start with using the phone as in the credit process, it didn't work initially, but you then pivoted and focused on payments. And once you had a payments ecosystem going, then you were able to build these much more successful relationships. So many interesting stories there. Let's go to Faith, because Faith, you and FarmForce are working in perhaps the toughest area of finance, dealing with the rural areas and dealing with farmers. And what difference is the cell phone making there? And how is Africa in some respects now leading the world in some of the innovation going on in rural finance?
Good afternoon, everybody. Thank you for having me here. So FarmForce was started 5 years ago, and we've been able to get into 3 continents. So we're in Africa, we have an office in Nairobi. We are in Asia with an office in Bangkok, and Latin America with an office in Guatemala. Our job involves around mobile phone or mobile device. If we don't have that one, I'm not sure whether we could be able to work. So we've been able to reach out to over 2 million farmers, especially in very remote sites. The power of the mobile device to be able to capture information of who is the farmer, where are they located in terms of the GPS? Are they located, or rather, are they farming in forest areas, okay, or water catchment areas? And also, the system is able to guide you on which areas are affected by pest diseases and what time has been taken to cure that specific disease. And at the same time, banks, they can access credible historical data of a farmer and be able to do credit scoring to know who is viable for a loan or not. Okay, the power of mobile device or mobile technology also in FarmForce, being able to access information from very remote sites like in Madagascar, where there is no roads network, and sometimes even the internet is not everywhere, but we are able to capture information offline, and when we get where the internet is, that information is uploaded into the web. So to us as FarmForce, of course, we've seen this changing because now most of our farmers are able to link to the market. That is, they are able to know where to sell their produce and how much they are selling. And at the same time, they are able to mitigate farming risk, such as pests and diseases, because the system is able to tell them, or they can be able to identify without the help of an agronomist what diseases are affecting their crop and what chemicals are available or rather approved for use in that specific crop for specific country.
So it's interesting. In some respects, you're saying that because of Africa was perhaps the region with the lowest infrastructure in terms of roads and other access, it was even more obvious to farmers and to FarmForce that the phone could make a difference. And that may be one of the reasons why there's much more usage going on in your rural areas. An interesting leapfrog. Now, Chris, you're not based in Africa. You're based in New York for Gates, yes. But you're very active in Africa and you're very active in technology. Why did Gates get so involved in, especially in payments and the mobile phone in Africa?
So Africa is important because it's a really exciting place for innovation worldwide. If you look at the number of mobile connections that exist in Africa, between 2007 and 2016, that number increased 340%, which is 3 times the global average. So the mobile phone took off in Africa like nowhere else, to your opening remarks points. That's your points in the opening remarks. I think another thing that's very important about Africa is that the half of all global deployments of mobile money, that is the non-bank offerings of mobile financial services, are based in Africa, especially sub-Saharan Africa. In fact, in some East African countries, about 2/3 of all adults make regular use of a mobile money account, so a non-bank mobile money provided service. So that's a really exciting development as well. That said, this has led to important improvements in financial inclusion in Africa, but there's still a lot of work to be done. So if you look at the statistics that the World Bank generates, the FinTech report produced every 3 years, sub-Saharan Africa improved from 23% coverage of adults who having some sort of account in 2011 to about 43% in 2017. That's well below still the global average of about 64% and 62% if you look at only developing countries only. So there's a lot of opportunities for continued efforts in Africa. And the main reason that the Gates Foundation got involved in this is because research shows that when people living in extreme poverty have access to the tools that they need to smooth their consumption and to be able to save for the future, they are more likely to be able to lift themselves sustainably out of poverty. I think that's the most important reason. I'm happy to talk a little bit about how we do that.
So again, in some ways, just like faith, you're talking about, in some ways, Africa's lack of resources and lack of alternatives actually made it more amenable to jumping to a very new, different attempt. Would you say that there's that certain, that psychology is really important? I mean, what's your thoughts from the rest of the panel on that? Is it?
Yeah, I think so, and I think that there is a certain urgency, right, around solving these problems for Africa. So we know that in about 6,000 days, Africa will have the largest workforce in the world. So we have this burgeoning youth population. We have issues to resolve around energy. And in fact, and I think it's important, this is a FinTech festival, but because our panel is talking about the role of cell phone technology in general, we're seeing cell phones be useful not just in financial services. We have solutions like PayGo Solar, for instance, where people are able to pay for access to solar energy using their phones, and they're paying for that using mobile money. That is changing lives. You know, children can study for longer. Households are able to connect to the rest of the world. You know, so yes, there is definitely an urgency And the lack of resources is definitely driving, kind of the use cases around this cell phone technology. And I think, on the one hand, there's things like access to energy. On the other hand, there's also actually generating income, right, is also really important. And it's been interesting to see how we work with a lot of small business owners, and we kind of sit with them and say, well, how do you run this business? People are running their businesses on their cell phones. I was in Uganda and I was sitting with a guy who's running a tourism business, a sole proprietor, and he was showing me how he finds customers via Facebook. He does an itinerary on his smartphone, emails it on his smartphone. He runs his entire business off his cell phone, asks them to pay him via mobile money. So in fact, the cell phone is playing a role in customers' lives which goes far beyond just the financial product. It is about generating income. It is about really improving their lives on a broad scale.
Very interesting, and also particularly interesting about how the cell phone is not only aiding the Internet of Money, but the Internet of Things, as you were saying with Pego Solar, and with some of the examples from agriculture. It's not just that you can make the payments and do the leasing through the cell phone, but the technicians can know if the system's working. And if it's broken, they don't have to wait till they visit the village to find out, right? They know back in headquarters and they can send somebody. Fascinating.
I think that just building on the point around the use of the cell phone and broader use of technology, what is clear is the fact that Africa is probably embracing technology much more quickly because of the availability of the mobile phone, because it probably has a lot more versatility than the systems which were there 10, 20 years ago. And I look at something around traders, for example, and access to credit. And the approach we as banks took years ago, where credit access was really a very difficult thing for most potential borrowers. But today, because of the convergence between telcos and banking services, telcos from a payments point of view, and banking services from a banking solution perspective, data analytics, and basically having a better understanding of your customers in terms of what they do with their time and their money. We are able to offer credit at the point of need. And so if I look at a typical credit access on our platform today, 30% of all lending we do take place between the hour of 3 in the morning and 6 in the morning. Now, it baffled us at the first time we saw that kind of information, and we begin digging deeper into it to understand what exactly was going on. But essentially, these were traders who are buying farm produce to take to the market and then be able to sell this during the day. And previously, they would not be able to get access to credit very easily. But today, it's something they don't even think about. So having a credit history, protecting it, and making sure that you actually put that money to good use is an extremely important thing for those type of people. Now, you wouldn't think that people would be going into banks at 3 in the morning to be able to access credit, which they honor at the end of the day, which is also something very important. So they are putting it to good use. And from an economic cycle perspective, it is actually very critical that we build these activities and ensure that people are able to access credit at their point of need, not when it is convenient for banks.
So at their time of need and also at their place of need, as you're saying. And while you didn't mention it, it's undoubtedly the case that the vast majority of those traders were probably women who, in addition to the time constraints, might have other constraints on being able to go to the bank, right? And because they may have had other things to do in the house where they were getting the money.
Absolutely, and I think one of the things for us, and that's absolutely critical in terms of the broader impact of financial inclusion, is to ensure that more women are actually accessing credit. There are a lot more women-led households in Africa. They probably are the breadwinner. They are the ones who ensure the kids wake up on time, go to school, are fed, and are basically better looked after. And for us today, just under 50% of all credit is actually being availed to women, which is a very, very important consideration for us.
And Faith, we were talking about financing farmers being a tough proposition, and we were looking at it more from the standpoint of the financiers. But farmers also are notorious, not just in Africa, but worldwide, for being a tough sell, right? They have this reputation of being very tradition-bound and reluctant to change. But it doesn't seem that that's the case with your farmers in Africa. What's going on here? Did we have a fundamental misunderstanding of this market to begin with? Or is it because the cell phone and other technologies making a difference?
Okay. According to research and also the experience we have working with the small-scale farmers, first they would resist, but at the moment there is a change, a very big change, and the reason is there is real-life data coming from each farmer. And the other thing is, before, there used to be a cooperative in order to access a loan, so that it means you are a security of the other. And right now, because there is transparency of operations, you can be able to know what each farmer has in terms of, let's say, acreage, how much they are able to sell, how much they can, let's say, repay the loan with. It is easier for them to access the loan as an individual rather than as a group. The other thing is farmers currently are embracing this mobile technology idea because they are able, let's say, to know exactly if they have a disease, which aggravates are available that they can go buy, let's say, chemicals, at what prices, okay? And at the same time, they don't need to wake up and go to that, let's say, aggravate. They can use their M-Pesa to go buy that particular, let's say, input without having to spend the time, walking or maybe paying a taxi or a public vehicle to go and get the input. So to us, or rather FarmForce, the way we've seen, working with small-scale farmers, especially using the mobile phone, has tremendously reduced the transactional costs and also the time used for them to do things like to go shopping for these inputs or seeds or something.
And it also seems to be personalizing something that was, while there obviously are some positive aspects of working in groups and cooperatives, it seems that giving farmers that individualization is also important from your experience. Now, I don't have the pigeonhole device in front of me, so I can't tell if you guys are developing your own questions. I wish I could see them. I can only see the one slide about cell phone technology. Can the organizers show me a quick pigeonhole vision so I can see if there are questions up there? Can you flip that?
Matt, maybe I can just add something while...
Yes, please go ahead while we try to get because I want to get you all involved. I can't see you because the lights are very bright, but I know you're out there. And maybe you have some questions, then we want to get you involved.
Sorry, sir. Perhaps I have a microphone here, right here. And if any of our guest members, audience members have any questions, you can raise your hand.
We're doing this old school. I thought we're Africa. We're supposed to be advanced. We were supposed to have it at our fingertips. Anyway, but that's fine. That's fine. We'll do it that way. Go ahead, Buhle, and then we'll go see if anybody from the audience wants to be brave. Why don't you go near or raise your hand so the person with the microphone can see if you do have a question so we can get some of these lined up.
Yeah, so I wanted to just pick up on what you said around people adopting the technology and in particular farmers as a difficult to reach segment, right? Like what we found is that often, you know, it's not that people are difficult to reach, it's just that the solutions that are being proposed have not really been adapted for a specific segment, right? We actually did a study with the Bill and Melinda Gates Foundation a couple of months ago to really understand what was going on with digital financial services adoption with farmers. And what we found was that there were a couple of issues, you know. So the one issue was really the fit of the product. You know, the farmers were like, a 7, 14, 21 day loan does not work for me because I'm only going to make money in about 3 months. So clearly that needs to be adapted. What we also found was that the way in which the farmers and actually a couple of other segments were using savings and loans was very different to the way in which we were thinking about it. It was not an either or. They were toggling the two instruments. They need both. So they would save and then borrow to make the difference, buy a cow, etc. And so in fact, we were giving them a toolkit that was insufficient. So it was clear that we needed a savings product as well. It was a design thinking exercise, so we actually built the prototype during the course of the study. And then we found that there were other issues like agent distribution network and reach into those areas, right? So we worked together with our partners to really say, all right, if we want to reach this segment, what does that mean? You know, in terms of the data that we're using to build the credit algorithm, because it needs to be different. Their phone usage patterns were very different. So if we don't want them to be left behind, we need to rethink that. We need to rethink the product set. We need to rethink how, you know, what repayment looks like. And honestly, you know, we moved from, a penetration into the agri segment, which was in the single digits, to the double digits over the course of just a year. And it was really by making those changes. And I think that that's something that's really important, is that it's not the cell phone technology. Great technology on its own, without the right kind of product innovation, without the right kind of business model innovation, won't achieve the results. And I think we see that in all of the big success stories that we've seen. And if I can also just address another segment that I think was kind of being left behind, which was kind of the micro retailers in Africa, you know, so they were completely being left behind. And it's only with interventions around how do we digitize payments, how do we incentivize micro retailers to digitize their payments. And you've seen some of the work that people like MasterCard and Unilever have done, right, with Jazaduka. That's pulling those people into the net, and now they can access working capital because, you know, the wholesale sales are now being digitized. So that's a big change. You see some of the players in Africa bringing on mobile point of sale devices, which are a lot more affordable for micro retailers, pulling them as well into the digital economy. So I think that a big part of reaching these more difficult to reach segments with cell phone technology is very much around product fit.
So sorry, I'm a bit older, so I have to go a little bit here to so I can read properly. But that's a great point, and it's talking about how we were started with the concept of leapfrog, but it's not just about one leap. It's about using that same technology to be on top of your markets, and you're describing several series of leaps to keep evolving with the market very fast. So let me, okay, so I'm going to go with who's getting the most votes to be democratic here. So following on that, how would African institutions go about credit scoring merchants for microloans, and what regulations exist in that space? So two questions within a question, building on just what you were talking about. What does have to change when you're looking at those micro merchants? And what are your regulators thinking about it, doing, and how does it affect you? Kenya's a particularly interesting case. I can see Isaac smiling here.
I'm not sure that...
And I don't know if Dr. Njoroge is in the audience, but...
I'm not sure that regulation is necessarily probably the key issue. Regulation sometimes does come and catches up with market, with the progress any market makes. But I think coming back specifically to the issue of credit scoring merchants, I think it's ultimately about the availability of information and credible information, which allows you to build predictive information for you to be able to use that to make the right types of decisions. And one of the things which I think is important for me and for us as a bank is to ensure that we begin taking the collation of data and putting it in useful forms as a key investment for us in being able to meet the needs of our customers, whether individuals, merchants, or whatever. So I think that the biggest investment I see going forward is basically, first of all, understanding the data, the information we have, understanding how we put it together, then understanding how we use it, and then using the right technology to be able to put in a particular orders, which allows you to be able to make decisions out of it. And I know that JUMO, for example, has done a lot of work on that. We have used technologies to be able to build these credit algorithms, which allow us to be able to assess, be it individuals, merchants, based on the information we receive.
And Buhle, you were suggesting that it's not just about the one-time risk analysis, it's also about how you can even evolve the sort of products you're putting out there and offering greater flexibility, mixing savings with borrowing, mixing, going away from static repayment schedules, all sorts of things that with this real-time connection through the phone to your borrower is now becoming much more common practice in Africa.
Yeah, and I think one thing that I would add to that, right, with micro merchants is that in Africa, it is still predominantly a cash economy. So the idea of, the first problem that you need to solve in order to be using this behavioral data to score customers is the digitization of cash payments, right? And what that requires is incentives for these micro merchants to actually digitize their payments. And that is a very difficult issue to address, right? Because if micro merchants digitize, and then you have, for instance, the introduction of taxes and levies, etc., that disincentivizes them from operating in that way again, right? So that's really key, I think, in terms of how do you get micro merchants digitizing their cash payments so that you can score them, but then also dealing with the other peripheral issues such as point of sale devices, etc.
So Chris.
So just to weigh in on this quickly, so some of the most interesting pioneering work in the use of alternative credit scores was done in Africa, in East Africa in particular, where mobile money providers were looking at basically your performance in terms of paying your mobile phone bill. And they had access to that data and were able to then try to analyze that to come up with a credit score for you. And that's a really kind of interesting use of a different data source than what a traditional bank might look at, like looking at your assets and your collateral and so on. So that work is very exciting. In terms of the regulations, I'll defer to my colleagues on the panel if they have any thoughts on this, but it's a little hard to discuss that because it's so different across countries in terms of what customer protections exist. But typically, most countries where they do have consumer protection regimes regarding credit and credit scoring, a big issue is transparency and being able to communicate to the consumer or the customer, or in this case, perhaps a micro merchant, why they were denied a credit application. And with some technologies, it's actually quite difficult to explain, especially if you look at some of the interesting work being done in, say, artificial intelligence or machine learning and so on. It's hard for the data scientists to actually come up with a reason as to why a customer was turned down using an AI-based format, and that's something that we're going to have to continue to work on.
So there's some interesting elements there about how do you make sure that you're able to deal with these right of recourse and consumer explanation, and you were raising, Buhle, the question of there needs to be a coordination between what's happening in terms of technological possibility and how the government is working in terms of its evolution of its fiscal systems and fiscal policies. And if these are not in sync, you can undermine some of the potential.
Yeah, and I think, Matt, the one thing that I would also add is that it is true that you don't want to expose your credit algorithm to the customer. But I think that, and this is something, maybe for some of our colleagues in Asia to also think about, as they go forth in this direction, something we've learned in Africa is that you can hide behind that and use it as a reason not to be transparent to the customer, but it's the wrong thing to do. And we've seen some of the repercussions of this in Africa, right? Because people start to lose trust in that system. And I think some of the work that we've done at JUMO, for instance, is we've kind of sat and said, okay, we can't tell you exactly how we're scoring you, but can we build a product that helps you understand where you are in this journey? Right, and that's what our points program product is all about, so that at least a customer understands how their interactions in the mobile money ecosystem and on our platform is affecting their qualifying behavior. And I'll tell you why this is important, because this panel is also about financial inclusion. I was looking at the Facebook page of a competitor in East Africa, and I saw this post from this woman, and she basically explained all of the different interactions she'd had with this provider. She'd done mobile money transfers, she had saved, she'd done like a bunch of things, all of which cost money, and she kept trying to qualify for credit and she couldn't qualify. And she basically says at the end of her post, I just don't understand. All I can conclude is that you have something against fat women. And the reason she concluded that, it was kind of funny, but it was also because it made no sense. And I don't think that you can put products out there that don't make sense to customer, especially when there's a cost associated with the actual generation of the digital footprint. And when you think about it, I mean, we have some ecosystems where, well over 40% of the people are earning under $2 a day. So I think one of the things to really think about when we want to use credit scoring, we want to use digital footprints, is that there's a cost associated with it, and therefore there is really a duty of care and a need to be transparent about what is going on here. And that digital footprint belongs really to the customer. Right? And one of the things that we're starting to see in Africa happening, which it kind of seems to be where the regulators are going to, is also breaking down data silos so that customers can truly own their digital footprint. And I think when we get to the point where customers can actually move around with providers, people that are hiding behind, these credit algorithms and kind of opaque qualifying criteria will be in a lot of trouble. So really my advice would be, when you build these products, build with great transparency, give the customer fair value, and then you'll truly see the benefit of cell phone technology.
And it seems that you're also suggesting that it's incumbent on the financiers to not only use this technology to manage their risk, but to use it to educate and evolve the literacy of their customers. And if you take that a step further, you can see how if you really can do that well, it should actually be a win-win, because that educated customer should be a better customer, right? I mean, and whether they're being better farmers or better merchants or better consumers, more responsible household budgeters, all these things, that same technology that's giving you that input can be pushed back out to the consumer if you think it through correctly. Right?
I think that's absolutely true, and I think the challenge, obviously, is how to simplify that communication, especially because the principal channel you have for facilitating that communication is likely to be the mobile phone itself and using SMS. And so I think that the key challenge we all have and we all face is to find ways of simplifying the message to our customers so that we can tell them what we see in ways which they can understand very, very easily.
So there's lots of interesting things to discuss here. We have a lot of questions. Several of them are around digital identity and how do you, if you're financiers, you have a certain obligation to know your customer and to comply with the regulations about making sure, and you also need to know your customer to make sure that the data you're using is really the customer's data. Yeah. How are you dealing with that problem in Africa, where it's not only the lack of a financial institution footprint that many people have, but many of them don't have conventional ID of any sort, like a beautiful biometric Aadhaar ID or some other card?
I think that KYC, if you're providing financial services, KYC is a necessary part of that through either an identification process or a proxy of an identity. Different markets in Africa are at different stages. We happen to have started this business in Kenya, which had developed a very, very good centralized database of identification. So through electronic means, we are able to verify the individuals. Once we receive the identity information, we go to a central database and are able to confirm that they are who they say they are. 99% of the time, it is correct. In other markets, it's not been as easy, but one of the things we are seeing is a lot of African governments are also beginning to invest in identity solutions, which will ensure that you move away from proxies of identification to a real document, which then captures sufficient information about the individual, and so you are able to verify who they say they are.
So that gets to another African issue. I mean, while ASEAN, there are 10 countries and they're quite different. In Africa, there are 55 countries, and they're maybe even more different, even though they're all from the same continent, and they're physically connected without a sea in between them. How do you cope with that, and what advice can you give to many of the people here who come from the ASEAN region if you're trying to figure out how to extend your own interests and activities into Africa? What are the lessons you should be keeping in mind as you move from here to across the seas?
So I think that one of the things that the Gates Foundation works very hard on is promoting dialogue between policymakers. And so one way that we do that is by sponsoring an organization that's based in Kuala Lumpur called the Alliance for Financial Inclusion, or AFI. And there are about 40 African countries that are involved in AFI. And AFI puts on learning sessions for discussions between central bankers and regulators, as well as other types of policymakers, to talk about different approaches to financial inclusion and to share experiences and implementations of different technologies and different approaches. So that's one thing that the ASEAN countries can participate in, is share your experiences, but also learn from the African experiences as well, because there's a lot of innovative things taking place here. I think, to your point about identity is a big portion of participation in society more generally. You can't vote, you sometimes can't go to school if you don't have an identity card or some sort of identity documentation. And so there are important efforts taking place, for example, at the World Bank, Identification for Development, or the project's called ID4D, and there's a multi-donor fund that is supporting that, the Gates Foundation helped establish, so countries can contribute to that fund or participate in that work. I think is another area of focus for identity. If I might just come back to the Know Your Customer rules just briefly and go back to that prior question. This is a really important issue because so many countries are concerned about running afoul of the international standards on anti-money laundering that are set up by the Financial Action Task Force, or the FATF. And FATF, in a November 2017 letter, did signal that it's very open to countries exploring ways to apply what they call progressive customer due diligence, or sometimes in some countries it's called tiered KYC. And they're looking for countries to kind of pilot or to think about these issues. So if you're in Africa and you're thinking about KYC and you're a policymaker, think about having a conversation with either FATF itself or with the regional FATF body to talk a little bit about ways to apply a tiered KYC approach.
Other thoughts for our ASEAN friends about?
Yeah. So I think I'm glad you brought up the number of countries in Africa, because Africa really is not a country. It is, I think, if you look at Zambia and you look at Ghana, the differences between those two countries are as big as the difference between Ghana and Singapore. Like, they are completely different markets. I think that for ASEAN players looking to come into Africa, because of those differences, it is really important to think about partnering. I think that partnerships are a huge theme, especially when it comes to serving kind of the underserved segments, because they are very complex and the nuances between countries are significant. I think the other big thing that is different in Africa, is the fact that people's digital footprints are really light. I've been looking at some of the apps in this region and just the level of interaction that people have, which is digital, and it's significant. And I think that it's different when you're operating in an environment where it's not data rich, right? Because the cost of data to be online, to be on Facebook is it's very expensive. So in fact, you're having to augment whatever you're doing with multiple other sources of data, which are different in every single country. So I think that's something that is really important in thinking about coming into these countries. The regulatory regimes are extremely different in each of the countries, and there's a high level of customization that actually needs to happen from a product perspective and also, a business model. I mean, for us, JUMO is currently in 6 markets in Africa, and, that hasn't been easy, and so that's, for me, that's the most important thing, is have a local partner.
Local partner, and remember that it's not going to be one size fits all just because it's one continent. So look, we're running into our last minute. I want you all to think of if you were going to tweet a message to this audience about what is the one key thing that they should take home about FinTech and innovation and being a part of what's going on in Africa. What do you want to send them away with? And who am I going to pick on first? I'll pick on Chris because he's smiling at me.
All right. So I think for me, what's most important to remember about financial inclusion is that it's about much more than simply having a bank account or a mobile money account. It's about helping people lift themselves out of poverty. It's about empowering women. It's about enabling governments to serve their people better. So financial inclusion can accomplish many different things, and FinTech can be a big part of that.
Great. Faith.
Okay, from FarmForce perspective, since we have presence in Asia with an office in Bangkok, what I can say, having worked between 3 continents, there is one thing I've seen, similarity of all the challenges like farmers are facing. And the best way to deal with this is to have a product that is adaptable to all. Okay, you need to listen to the client's requirements, okay, and come up with a product that can really help them, like in terms of transparency of operations, okay, and it's easy to use and easy to access.
Great. Be adaptable, but remember, every farmer has to deal with weather and every farmer has to deal with insects. Isaac.
I think for me, the message is that technology used well can actually transform lives, and that we need to embrace the use of technology, make it easy to move it from one market to the next, but be relevant with the use cases you are basically trying to deal with. Walking through this FinTech festival today, just about in about half an hour, I saw 3 or 4 things which I'd love to take back to Africa, because I know there are interesting things happening here and they can be part of the transformational process within our continent.
So let's build those bridges. And finally, Buhle.
Yeah, I think for me, the key thing I'd like people to take away is that, technology, data and analytics are great and they're important, but they need to be in service of something. And what makes the difference is when they're applied to real problems, so really understand that problem. And what makes it work is when you design for the lives that customers actually live. And that ultimately, when you're done with your design of your product, of your business model, and you've applied your technology and your analytics, you need to take a step back and say, is this thing that I have created empowering? Will it build trust? Have I protected the customer? Because if the answer to those questions is yes, then you've built something which is sustainable, where the value is shared, equally between you as the business, the customer, and then as a result, society will also benefit, which I think is really what we're looking for, right, with financial inclusion and economic development.
So make sure it's designed for real lives and also for empowerment. Very, very interesting thoughts to ponder as we go forward. So let's thank this panel. They were really terrific.